Good evening, everybody. Nice summer evening. All right. I thought we'd have kind of a pretty lousy array of charts tonight after the move of Thursday and Friday, but you just got a huge number of great charts. So we're going to be here for a while. So that means at the end, the requests need to be just one, because more than likely I'll have gotten to most of the good charts before then. Okay, so as we saw, this market opened up, was down 600-700 points right from the get-go. Looked pretty bleak. Looked like what it was supposed to be doing after an island reversal. And but there was one factor that kind of made itself evident pretty early. I mean, real early, like almost from the open. That as soon as they opened, you could start seeing the buying, especially over in the NASDAQ. And same scenario over in the S&P 500. So I don't know where the Dow actually opened. Sometimes these feeds are wrong, whether they opened way down here somewhere and came back up. But what was the graphic evidence right from the beginning was the fact that they weren't selling once the market opened. They were buying, they being the market. I don't even know where to start. So let's take a few, look at a few of the ones that, and the reason, and so when I turned on the screen and as soon as the market opened, my account was going positive immediately, big time. So there was quite a few, not quite a few, but a couple good positions that were doing what we would suspect them to do. GM or GNMK, this is just such a clear, obvious buy with that scoop Morningstar signal off the 50 through the T-line, and look what it did. I mean, this is the reason that I just love candlestick analysis, is because this was telling us the buying had stepped in. The market opened up down 700 points, and it opened. This one opened positive and immediately started going positive. That takes a lot of anxiety out of your trading each day, when you can see that the patterns are doing what they're supposed to be doing, even if the market has gone dramatically against you. So I always come back to the fact that if you're in a pattern, more than likely you're going to still be all right, even if it didn't move when the market was down 700 points. At least it wasn't opening way down because the pattern was already in effect. So just the fact that they were bouncing off an obvious support level. No, I forgot what I was saying. Were you looking at GNMK prior to this morning, or did you catch it from its behavior? No, we recommended it on, what day was it? We recommended it on Thursday, which was this day right here, because we had seen, if you take the chart right there, look what you have. You have kind of a scoop pattern with a Morningstar signal bouncing off the 50. We had an entry strategy that if it traded above, where was it? 980, just a positive open. You wanted to be buying it. Well, as soon as it came back up through that level, what did it tell us about our pattern? It was working. Yeah, the pattern now, if you go back further, I mean, here's why you buy, because you got a scoop pattern, morning star signal, a close above the T-line, starting the next uptrend, obviously off the 50, and look what your pattern should be. Wave 1, wave 2, and observe the obvious. Look where they broke out with a fry pan bottom, your best friend breakout. Gave you a nice strong price move, gave you a big sell signal. If you were back out, not playing this anymore until it got back down here. Still a buy? Yeah, not as good a buy as what right in here, but I would still suspect this type of move. So the answer to that is it could still be a buy, but it may not be your best buy, and we'll go through. Humbug. Had that all set up already. Look at this one. Same scenario, left-right combo right off the 50, closing by the T-line. This might be a much better buy, because if this is wave 1, this is wave 2, wave 3, you might be better off buying here, because what's your risk reward at this point? If it opens positive and trades positive, it's broken out. If you buy right here and it closes back here, you're back out of the trade because it didn't work. So you're getting in early, and that makes your risk reward much better. But if it works, you got big upside. If it doesn't work, you're back out with a small loss. Zixi, because it broke out the other day, you can still see the fry pan bottom. You can see the whipsaw action at the end of the fry pan bottom. This is not uncommon that when you see a fry pan bottom, all of a sudden they start whipsawing it here, get ready for the buying, which occurred today. Another one, wave 1, wave 2, fry pan bottom, breakout going into wave 3. We had also recommended YY because of the pattern that you could recognize much easier by the signals. There's a left-right combo, right smack dab on the T-line. We recommended this last week. I can't remember which day it was. That was on Friday. So that would have told us that if this is a left-right combo, and it opened positive, confirming your left-right combo, what type of pattern was it setting up? A J-hook pattern. And then notice what it did today. Market opens down X number of hundreds of points. It opened flat, bobbled a little bit right to the T-line, and then took off. So this is why I keep stressing, if you trade the patterns, you've got a huge advantage because you can recognize the signals that are creating or confirming the pattern, and we know what the expected result should be, and they're usually going to perform, if not good, at least flat if the market all of a sudden goes against you, giving you a little bit more time to get out of a market that's not acting well. Vivo, ever since they gapped it up, you can see the fry pan bottom, and you can use a very simple trading strategy. As long as this stays above the T-line, you stay long. Just a very simple rule. We were going to buy NBR because of the classic pattern. Classic patterns, your fry pan bottom, strong price move. Pull back. If it starts trading positive, the classic pattern is the J-hook pattern that follows the fry pan bottom. This being wave 1, this being wave 3. So that one can still be bought on positive trading. Nail, because of the home builders, there's your left-right combo. Where would you think a quick move might be? Right back up into this area. So Unfortunately, this has such difficult times trying to get into the calls, so it's probably better off just buying the stock. The bid-ask spread on the calls are just huge. And when is it time to come out of a trade? We shorted NVTA on Friday as it was trading lower. And then today it did the bullish left-right combo right on the 50. What'd that kind of tell us? They weren't selling it off, better close it out. So this is that simple case of cut your losses short and let your profits run. We can visually see when a trade is not going in the expected direction. Zoom was another one that we had been recommending over in the options room. Maybe you trade options on XPH, say, instead of the... that could be. Didn't think of that. I'm just too greedy. I like to go after the leverage stuff. Zoom. Observe the obvious. A J-hook pattern supporting right on the T-line. And notice what it did today. Not only did it gap up through the breakout area, it did a trend kicker signal through the breakout area. Where do you think the next price move is heading to? Wave 1, wave 3 up here somewhere. We were going to short CrowdStrike, but it opened and immediately started trading positive. This one can be considered for going long if it opens positive tomorrow. And the biggies were all kind of lollygagging early in the day, and then they started coming back. Tesla, still in an uptrend. Apple. Notice what this pullback has done, or hasn't done. It hasn't been able to close below the T-line. That's a very significant piece of information. Amazon. Probably wouldn't be buying it yet, but you can see what's happening here. They haven't been able to close this below the T-line. Trend kicker, no. FT, you'll have to look up a trend kicker. That's just a bullish engulfing signal. And NVDA, NVIDIA. Not anything great, but if it starts breaking out through this level, look for the next wave to come up into this territory. And Netflix, you can see the channel. Bullish Harami. You can get ready to buy this one on positive trading with the expectation. Now you're coming back up to the top of the channel. Okay. This is the advantage of being in a chat room where everybody's kind of looking for the same type of signals and patterns. There was a ton of them that people were finding today. Makes my search a lot easier at night. F-SLY. There's your J-hook pattern. Coming off an inverted hammer. Where do you think your next target's going to be? Probably somewhere up in this range. So, NVAX. There's just a ton of good charts. Observe the obvious. Inverted hammer, Doji, gap up. Significant gap up. Well, number one, it came up through the T-line. Number two, you can pretty much see what it broke through, that upper trend, and there's kind of your wedge breakout. So that analysis right there becomes very significant in the sense that we know what the probabilities are on a wedge breakout. Usually a very strong price move. And that's what we're going to be going through this weekend. This we got into very profitably because of this analysis right here. Let's see if I can do this without... Well, Shazam. There's that wedge breakout. Look what happened after that. Now, did we know this was going to happen? Absolutely not. But knowing what investor sentiment does and what everybody else is watching, when we saw this little breakout right here, which is basically your best friend, gap up through the resistance level, we only had one criteria after that. You stay long as it stays above the T line, and then look what it did. I mean, it just skyrocketed. So, well, it's nothing more than just identifying the trend, and I think I've got some more in here, so I'll find them here in a little bit. But remember, other people are watching these wedges. We see them because you can start seeing that it's not really going anywhere. It's positive now? Yeah, if you might be watching this now because of the buying back here at the T-line. You look for the next wave. The T-line is the 8 exponential moving average. How many other new people are in here? Or relatively new? Oh man, I goofed up. Well, let me do this. Just a reminder for everybody. The blue line is the 50-day moving average. The red line is the 200-day simple moving average. The T-line is the 8 exponential moving average. You can take everything off this chart except stochastics, the signals themselves, and the T-line, and you could trade very successfully. We also add on here the 34 exponential moving average, which works relatively well. The T-line is a trigger line, yes. If you see a candlestick buy signal and a close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close below the T-line. And our caveat is, the further away you move from the T-line, the higher the probability they're going to come back and test it. So if you're up here in this range and you see a bearish harami that far away from the T-line, stochastics in the overbought area, you start taking profits because where's the next likely target? Back here. On this chart is the Doji sandwich to the downside or not? Is the Doji sandwich. There's really not a Doji sandwich to the downside. No, that's a bearish harami. Last 3 candles. These, no. Remember what a Doji sandwich is. And I'll find a Doji sandwich. Doji, it's not on here. But that's not a Doji sandwich. It's a big down day. There's your bullish harami Doji. And now, today would have been very easy to see that it could be trading off, but as we saw in the other indexes, as soon as they opened, they started trading positive. Doji sandwich, Doji sandwich. I'll find a Doji sandwich. NK is a Doji sandwich. Nope. I'll find one. Do you wait for the T-line or do you just trade the candles? I trade the candles, but if I'm that close to the T-line, I'm going to wait for it to close above the T-line. If I'm a good fur piece away from the T-line, I'll trade it and then see what happens once it gets to the T-line. I'll run across a Doji sandwich in here somewhere. Forgot where we ended up. NVAX. Oh, because of the wedge breakout. That's where we were. All right. So if you can get rid of these, you can identify that trend or that wedge, and they break out, the probabilities are now much better, especially if you have, there's your little Doji gap up. Boeing. Yeah, this is what you would consider a Doji sandwich. Bullish candle, a Doji, and what's our Doji rule? The price is usually going to move in the direction of how they open after a Doji. So if you see this setup and a Doji, and it opens positive, there's a high probability that the magnitude of this candle is going to be the same magnitude as this candle. If that's the case, and it's occurring right here, what's it telling us about right here as a breakout? It's probably going through. You want to be buying immediately. Then again, the further away you move from the T-line, the higher the probability it's going to come back and test it. So as soon as you saw the bearish kicker type signal, you would have been taking profits, because where do you think it was coming back to? Down here to the T-line. Okay, let's see. I'm way off track. Oh. This is one I was looking for. So when they pull back right to the 50, and we can see what type of signals are occurring, that's when you get ready to buy. That was, again, that same scenario. When it gets down here, start looking for buy signals. And why is that? It's not because of the candlestick signals. It's because the candlestick signals are telling us this is where everybody's buying at the support level, becomes a high probability trade setup. That's true. They look for the Doji. All right. I'll find one, and so here's another one coming right off the 50-day moving average area, Codex. More than likely, you're going to see this one recommended. Look at what happened down here near the 50. Hammer, Doji, 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 Doji. Remember what a Doji represents? Indecision. What does a series of Dojis represent? A lot of indecision. What's this candle tell us? They've just told us what their decision was going to be. It might be too far away from the T-line to buy. So this is why when somebody asked earlier, is this still a buy? The answer is probably yes, but not as good a buy as right here. So now the question is this the best place to have your money, or some of the other ones that we're going to be looking at, like this, is this a better place to have your money as far as risk reward? One that just did the signal and hasn't produced upside yet. There you go, Will. Yep, don't let anybody get a definition out of whack. Let's see, we did NK. NK is kind of your morning star signal, but what did it tell us? This is what you call the message. The message was they gapped it up, pulled it all the way back. But what did that gap up tell us? There was somebody there was a lot of people very interested in getting in with great enthusiasm. Profit taking. What's the Doji Harami tell us? The profit taking's over. When was it time to buy on this day? I'm going to skip ahead. Neti. You can see the fry pan bottom breakout. Somebody wanted to get into this with great enthusiasm. And they took profits. So now what do we want to watch for? We want to see when the profit taking ends, because this told you there was great enthusiasm to get into the stock. We're waiting for the profit taking to be over, which could be a Doji, a hammer, Harami, and then you start buying on the next signs of buying. So the message is, even though it doesn't look good, the message was that somebody had great enthusiasm. Is this right? I'm not sure if it got up there, but they opened here. This is skewing this. There's your fry pan bottom. There was your gap up profit taking. Now it looks like the profit taking's over. It becomes a viable trade. Any difference between those? Well, this one's already telling you the profit taking's over. You can be buying. Okay, let me another one, series of dojis, and a close right here on the T-line. Now, if this opens positive, what information do you have immediately? One, it's confirming what could be considered a cradle pattern with that series of dojis and a close right on the T-line. Two, it's telling you the T-line's not acting as resistance anymore. Probably a good strong buy at that point. Yes, the Doji is sandwiched in between. I'll find more Doji sandwiches somewhere. All right, so here's what we're going to be concentrating on this weekend. Looking for the breakouts. Not only looking for the breakouts, we're going to go further. We're going another step further than what we did on the 6th, where we were identifying the breakouts. Now we're going to be identifying them and figuring out what is the best strategy. Do we buy the stock? Do we buy calls? Do we buy debit spreads, credit spreads? Do we buy the stock and spreads? We're going to go through how do we maximize our potential of a big price move situation. Zixi. Oh, did a Doji sandwich at 10:30. Dean, yes. The Doji it doesn't matter what the color is of the Doji. It's irrelevant. That's like, what's it? Harpo that was standing in front of Groucho in court. And Harpo says, I think it was Harpo, says, "What's big and gray with tusks and a big trunk?" And Groucho says, "That's irrelevant." He goes, "Yes, you're right." What was I looking for? Oh, a Doji sandwich at 10:15. Right in here, let's see. That's the 5-minute chart. There's a Doji sandwich, yes. Oh, who was it? Who's the other one? There's Groucho, Harpo, and Chico. That was it, Chico. So what we're looking for is the breakouts. We're still on the 10-minute chart. Looking for where would you start expecting big price moves. And then once you saw it, what do you put in place? Do you buy the calls? Do you buy the spreads? Do you buy the stock and a combination? Calls, you're saying there's a Doji sandwich. Yes, there's a Doji sandwich right here. Big candle, Doji. This candle right here is the same magnitude as this candle right here. Now, if this candle right here is going to be the same magnitude as this candle right here, what's it tell us about the breakout level? It's breaking out. Zeppo. Was Zeppo the normal looking one? And GSX, where was the breakout level? Right about there. What did you have right here? Little best friend gap up through this level. What did that tell you as far as a potential breakout? So this is what we're going to be looking at. Should we have been buying here or should we have been buying here? A little later. Does the position of a doji matter where it forms on the day? Well, if you're looking for a doji sandwich, you're trying to see that it's had a big day and then a doji type day. I'll find it again. It doesn't mean as much if the doji the next day is down here. What you want to do is see the doji here and then the next day, so the doji would be sandwiched in between those two large candles. There's your J-hook pattern. Where would you want to be buying this one tomorrow? Right, anything above right there, positive open. Why would this be a significant move? There's your kicker signal. There's notice, and this is why you want to know the nature of each one of your candlestick signals. Indecision, inverted hammer, doji hammer. Still above the T line. Now you can see the curvature. You can be buying this one. What was your expectation buying this one? Wave 1, wave 3, bringing you up here. There's your J-hook pattern. There's your classic fry pan bottom J-hook pattern. You can be buying this one on positive trading tomorrow. Remember, the bigger the signal, the more compelling there's a confirmation or a change of investor sentiment. And notice exactly what happened right here. A hammer type signal that just touched the 50, then a doji, followed by your best friend gap up, followed by a doji sandwich. What'd that doji sandwich tell you? There's more upside. What did your best friend signal tell you? You probably have a lot of upside. Where was it time to start thinking about taking profits? When they were gapping up and doing a doji in the overbought condition, where do you think a lower open would take you? Back at least to the T line. Joe, very simple. we'll do, let's see, what do we got going on tomorrow night? I guess, we're doing stop losses tomorrow night. We'll do a scanning session again, but right now all I do is take my universe, which is stocks greater than 5, trading more than an average of 200,000 shares a day, and finding which ones had the biggest percent moves the previous day or today. And now, if the market had been pulling back and was bottoming out, I'd go one step further. I'm looking for all the stocks in that universe that have stochastics in the oversold area, less than 20, and had a big percent move that day. That meant all the stocks had been pulling back and in the oversold area, now probably showing buy signals. Is there a software scanner? Yes. I use Metastock or Thinkorswim, TC2000. OCFT. That one would have been one that you were already should have been watching or would have been watching, because look at the big percent move, Morningstar signal. It started to curl up. You probably would have already had this on your watch list. You wouldn't have found it because of that day, or you would have already found this one and had it on your watch list. So a lot of them you're already going to have on your watch list, because look at what happened here. Big percent move. You can see that big percent move did a couple things. It broke out through the 50, and it broke out of a fry pan bottom. That told me, yep, if this opens positive tomorrow, I want to be a buyer. Oh, I think the live scanning for TC2000 is like $97 a month. They've got one that's delayed. If you're not trading during the day, you're just swing trading, so you only need to check or scan at the end of the day. They've got one that's $37 a month. Metastock, I think it's a little bit more expensive, but it's got tons of more information on there. As a matter of fact, they've got our, I've worked with Jeff Gibby for years, where we've developed all the signals and patterns where you just download them and it finds them for you. So anytime you bring up a chart, it will show you all the signals, and then they've got ways to scan for them. Is it that much? Well, yeah, the other benefit of Metastock is that if you're trading futures or currencies or Asian stocks, Canadian stocks, it's got all of it. Whereas TC2 or TCNet is only American stocks. So who was asking that question? Joel, if you come in during the day or even on a night like tonight, people can give you the answers of what they think is the best scanning softwares. I've got TC2000, and it's one of the older versions, but it's all set up. I don't have to change anything. Okay. Now I forget what I was doing. That's a kicker signal. Opens here, closes here, gaps up. That tells you it's breaking out. There's a lot more upside. AM. Yeah, you can buy this one on positive trading. let's see, we did Boeing. Boeing you can buy because of the classic pattern. Fry pan bottom, J-hook pattern. Let's see, what are the other classics? Copa, fry pan bottom, J-hook pattern. Next target, first target would be here. Second target would be the 200-day moving average. That would be also a function of seeing of all the other airlines. There's your fry pan bottom on American that did break out, pulled back. Now where do you think your next likely target will be? Probably back up here to test the 200. What have I done? I think that was it. Well, that's a fine howdy do. APCT. That's just great. I was actually had that one marked as a recommendation for tomorrow, and I even pulled it up. Here's another classic pattern. HXL. Fry pan bottom, J-hook pattern. Where's your next likely target? Wave 1, wave 3 takes you up to the 200-day moving average. What would you call the bottom, or the doji at the bottom? Down here? Well, maybe it was APT. Is that the one you're looking at, Tom? No, it wasn't APT. Okay, let me man, we're way past time. All right, call in for pizza. Here's another one. There's your bullish harami. Gap up. If this opens positive, where's your next likely target? The top of this channel. That would be a significant price move. What do you call the doji at the bottom of AA? Of Alcoa? Of AA. AM. Oh, American Airlines. Okay. That's just a doji. I told you there was indecision. Then they gapped it up. So that probably told you that was the bottom right there. You could be buying this one. Hold on to your individual ones until I get done here. I'll get to everybody. NIO, another J-hook pattern. Where would you be buying this one? If it came up through that level, you're in wave 3. We did CPA, NBR, APPS. That one is your proverbial classic pattern. Fry pan bottom breakout, doji gap up, right at the T-line. This one you can be buying on positive trading tomorrow. Dudley. Another J-hook pattern. So observe the obvious. Nothing, 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 nothing. And bam, there's your message. There's where you could start buying. That little gap up and that big gap up, not little gap up, but that breakout followed by a message tells you, all right, it's time to buy because something's happened here. don't buy there, you don't buy there. Now you can think about starting to buy, or definitely start buying there, because that tells you what created that breakout, the profit taking's over. Now you get ready. Now it's doing another J-hook pattern. How many waves do you stop buying? Oh, I only count wave 1, wave 2, wave 3. If this is wave 1, this is wave 2, this is wave 3. If it gets up here and pulls back, this becomes wave 1, this becomes wave 2, wave 3. I do have Marna on here again. If you hold off, I'll have most of these. This one, you can see the slow curve. You can see the Doji gap up. You can be buying this one. And U1. Okay. Yes. So there was your nothing, nothing, nothing breakout. There was your inverted hammer. This is why you want to know your 12 major signals. If you see an inverted hammer and they open up positive the next day, you've got a 95% probability or greater it's trading positive. Is wave 1 and 3 supposed to be identical? Pretty close. At least you use it as a measuring device, that if wave 3 is starting to get to be the same magnitude as wave 1, you'd be a little bit more conscious about watching for a sell signal. Semi, there's your little gap up through the resistance level. Look at all the series of dojis here, and now what's it telling you about your downtrend? It's gapped up through the downtrend. Now what are you looking for? Positive trading, taking you through the 50, gives you the high probability you're now in a strong uptrend. Where will it go? That's where you use your analysis of the next sell signal to tell you when it's time to take profits. DNKG, we made lots of money with this. There was your J-hook pattern, more upside. There was your dark cloud. Where was the next target? Back to the T-line. Nothing yet until your bullish engulfing signal today, telling you more than likely you've got a major J-hook pattern in progress. So there's your classic. Fry pan bottom breakout. Strong price move. Pullback. Look for your next wave to the upside. Yep, yep, I think we did that, yep. Harami gap up. And, oh, this line just gave you the drink. There's your fry pan bottom. Not a real clear one, but you got to, what's your prerequisite for a J-hook? A strong price move. Then your J-hook pattern. Look at your little Morningstar signal. What can we expect out of this move? Wave 1 looked like it to be about $4. That tells you you're probably heading for about the $13 to $14 area. Whose handwriting is this? Apparently that wasn't it. There's kind of your mini scoop pattern. Flat handle, Morningstar signal. So add your additional evidence of where this Morningstar signal occurred. Right here off the 200. What's this illustrate? A possible slingshot effect to the upside from your scoop pattern. Probably the same magnitude as this right here. Let's see, how many have I skipped here? Dick's Sporting Good. you can see what it did the other day or on Friday. Did a morning star signal, opened lower today. You can still buy this one, especially if it comes through here, because now you have a wave 1, wave 2 going into wave 3. So that's a one to keep an eye on. And this one, morning star or a kind of a left-right combo. Guess this isn't a very old one, is it? That should have another strong price move. MGNX. Kind of your doji sandwich breakout after a big series of dojis. Where's your next likely target? There's target number 1. Wave 1, wave 3 up here someplace. These are, yeah, Bobby, these are all on daily time frames. Now, if you're intraday trading, it doesn't matter. Let's see, which one had a big price move today? Zoom. If you're day trading, all you do is you flip to, I use the 10-minute chart to tell me what to do. If I'm day trading crude oil off the 10-minute chart, there's my buy signal. How long do I stay in this? Until I see a sell signal and a close below the T-line. So I might come out of it. Then I get back in till when? Till you see the next sell signal. So if I want to trade a little bit faster, I'll flip to the 5-minute chart. So if you just remember that the candlestick charts are the accumulative knowledge of everybody buying and selling during a specific time frame, doesn't matter whether that time frame is a 1-minute, 5-minute, 10-minute, or a daily, weekly, or monthly. It's still the accumulative knowledge of everybody buying and selling during that time frame. Kareem, we'll do another session on day trading futures, but it all boils down to what is your nature. Do you like to be trading actively, or I trade during the middle part of the day. If everything gets boring, I'll see what soybeans, wheat, cattle, gold, or something is doing. There's a nice J-hook pattern. This one can be bought on Positive Trading tomorrow. All right, so I'm supposed to remind everybody, this coming weekend, we are going to be taking the breakout patterns, searching for them, and then figuring out what to do as the best trading strategy. Wayfair, you can see what's happening right here. Wave 1, fry pan bottom, wave 2, where's our breakout? We can see it right there. If this opens positive, what do we want to be doing? Well, probably not going to be buying the stock, but we'll take a look to see if we want to be buying the calls outright, or do we want to be doing spreads? Which ones make the most sense as far as math, or the math for that? Peloton, where is its breakout? I'll get rid of all these. Right there, with a doji gap up. If this opens positive, what's the best strategies for now the potential breakout of that magnitude? So if you took the June 6th training, we're expanding it to a full day training that not only are we trying to identify where the breakouts might occur, but have your best strategy set up to take advantage of that. Okay. Did somebody pull this one up? And nothing there. It was TBIO that I think has a much better chart setup. I am still trying to figure out what I wrote there. A, P, C, T. That doesn't make any sense. Oops. No, I've goofed up somehow. All right. I don't think that was it. Oh, maybe it is. They are... Ah, there it is. All right. Morningstar signal, inverted hammer, doji, bullish confirmation. Fry pan bottom, breakout. Wave 1, wave 3. Could take you from the 38 level up to the 85 level. That was AR. So anyways, this market, I don't know what the futures are doing in the after hours right now. But this is a good chart on the Dow, but the more compelling chart telling us the sellers might have disappeared. If they open this positive, giving us another J-hook type pattern, that means there's more upside. All right, our formula should be over on Ninja Trader. They were one of the first to use our formulas. It's still up 24 on the S&P. The Dow's up 200. All right. Now, remember, that doesn't mean a hill of beans until about 5 minutes before the market opens. Okay. Is there any general questions on candlestick signals? Yes, it's recorded. Just sign up for it. As I say, the only disadvantage you have getting the recording is that if you had a question you wanted to ask right at the time, you don't have that opportunity. However, you could always come back and say, you were showing a chart on XYZ and I didn't understand what the process was. Can you explain it? You could either have me explain it here in the room or send me an email. The island reversal is when you can draw an island. Let's see if I can do this. Bah. If you can draw right around this without touching anything, that's your island reversal. And that's a very strong reversal pattern. Yes. Kareem, you could take everything off this chart, even the T-line, and use the signals. What we use the other indicators for is just to give us a little bit more clarity of where everybody else is buying and selling. Obviously, everybody has the 50 and the 200 on their chart. Nobody has the T-line on their chart. It's not that it's exclusive or proprietary. It's just nobody uses it. We've discovered in the past that It acts like a natural support and resistance level of human nature. So when I'm doing a session for new groups, the most powerful statement or the most powerful slide is that if you have the T-line, which is a natural support and resistance level of human nature, and candlestick signals are the graphic depiction of investor sentiment, when you combine those two, you've got an extremely powerful trend analyzer that keeps you from getting whipsawed in and out of positions. At one point, is an island in reversal negated? If they probably come back up here and fill this gap. Yeah, it could be. Yeah, and it probably doesn't really matter whether you use the 9 or the 8. But the number of people that use either of those is percentage-wise 0, and it's so minuscule. The abandoned baby is also a one-day island reversal, yes. Okay. Let's see. Jim, go ahead and do the double line. All right, and in 3.6 seconds, do the next double line. All right. Bob. You could be buying this one on positive trading. More of a J-hook pattern than a strong reversal. Apache, another one that if the oil's open positive tomorrow, you can be buying them, and then just don't let them close back below the T-line. Taiwan, another one that's kind of a fry pan bottom J-hook pattern. You can be buying this one on positive trading. Use the T-line as your stop. Acadia, nothing here yet. It still needs to get above the T-line. You're at a support level. You did a left-right combo, but you still need to see bullish confirmation. And you're at best, you'd be in a trend channel, so you can be buying it. iHeart, another one you can be buying. There's your classic fry pan bottom J-hook pattern. Next target should be the 200-day moving average. 2, same thing. It's not a real dynamic chart. Doesn't have a lot of upward trend to it. If you like it, you can be buying it. You just want to make sure it can get through this level right here. Penn, buy on positive trading. AVLR, you can buy in positive trading breaking out. And this one you can buy with the expectation it's going to the 200. Whoops. Dollar General, nothing great. Probably wouldn't be long or short. There's really no direction to this one. And they were showing that this one has gone from pennies to $4.50. It's been as high as 12 or so, but went from a few pennies up to this level. You could be buying this one, but I wouldn't be buying it unless it came up through today's open. If it gaps up through that open, you want to be buying it immediately. UPS, not a real dramatic chart, but I would suspect if you're buying it, you watch to see if they can do a bobble breakout here at the 200. CIM, another classic get ready to buy this one on positive trading. Your fry pan bottom, J-hook pattern starting with a left-right combo. Clovis, wouldn't be long or short right now, just because of dramatic direction. And Labu did a Morningstar type signal right here at the moving averages. You can be buying this one if it opens positive tomorrow. Mr. Cooper Group. Big bullish engulfing. Expect a 45 degree coming off of here, the same trajectory. GAN, that's a kind of a Morningstar signal. This one you can be buying. Not a very fairly new offering, I guess. QDEL, you can buy this one. It broke out. There's your Doji sandwich. There's your breakout. Now you're looking for it to break out through this level, which would give you a wave 1, wave 2, wave 3. Hey, Hewlett-Packard, not anything wildly exciting. Sideways, just has a hard time getting out. If you like it, you can be buying it on positive trading. You just have to watch to see what happens once it gets to the 200. Occidental, get ready to buy on anything above the T-line. Evoke, you can buy on positive trading. Don't let it close back below today's open. Workavia, just stay long on this one. And Merck, stay short. Ever since the failure here at the 50 or at the 200, you stay short on this one. You've still got more downside. AMLP, you can buy this one if it opens positive. Use the T-line as your stop. FireEye, be ready to buy this bullish engulfing on positive trading. Now, I say be ready to buy in positive trading. Use the T-line as your stop because your stochastics on a lot of these are in the oversold area. So it's going to be a function of the market trading strong tomorrow to want to stay in some of these. This may be just bounces, not necessarily mean it's the uptrend has started. It may just mean the downtrend has stopped and you still have to wait for some bullish signs. Southwest, same scenario. You can buy in positive trading. Don't let it close back below the T-line. Citigroup, nothing here yet. I wouldn't be short, but I wouldn't be long yet. Is your signals offering through Westmark Trading different than what we have? Now, Westmark Trading is one of my marketing arms, so it's the same thing. Space wouldn't be long or short this one. Just not a good trading chart. Hospital Corps of America, same scenario. I wouldn't, if it opens positive, I wouldn't be short. If I'd cover short positions, I wouldn't be going long. Clovis, nothing there right now, sideways. iRobot. This one you can get ready to buy on positive trading and stay with it as long as it stays above the T-line. PH, not a strong reversal. That's not a real reversal signal, but it did break the downtrend. So you stay long, but when you don't see a strong reversal signal, you just want to be a little bit more aware of the first selling, that you probably want to take profits and then get ready to buy if it does another bullish signal. Ring is stuck in a wedge. I wouldn't be buying this one unless it breaks out to the upside. United Natural Foods, another one where it did the homing pigeon, which is a form of a harami, bullish confirmation. So if you'd been short, you would have covered it today. If you're buying it on positive trading, you just watch to see what it does once it gets to the T-line to see whether it can get through or not. And TLRY, nothing. Wouldn't be long or short. It's still sideways. Square, you can be buying this one if you closed out in the last couple of days. You can buy this with your trajectory still in this steady uptrend. YNDX, nothing wildly exciting here. It's just a nice steady uptrend. You stay long. CZZ, you can buy this one with your next expectation of coming back up to test the 200. We did Coop. AIKI, yeah. It's a fry pan bottom. I'd be more interested in buying it if it comes up through this level. Oh, that was it, ARC. You can be buying this one. There's a wee little teeny gap right there, which would be a first likely target. Did you scan the stocks about to break out? Yeah, they were just very simple. As a matter of fact, a lot of them we identified as people were looking at them during the day. See if I've got a few more here that I've got on the breakout list. This one, if it breaks this wedge, got a lot of upside. And again, the results of these are based upon witnessing a pattern breakout and then using the candlestick signals to tell you that you're in the right direction. That's a nice J-hook pattern. You can be buying this one. Just make sure your volume stays hefty on these dollar stocks. What's the reasoning behind a Doji sandwich? Basically, it's kind of telling you they've taken it up, then they've kind of done some consolidation, and then remember the Doji rule. If it opens positive, they're going to trade positive. So that tells you they've taken it up, did some profit taking, and then they're still taking it up some more. You can see the slow curve fry pan bottom breakout, the inverted hammer bullish confirmation. Now, what's the analysis? You just stay long as it stays above the T line. Is this a bobble breakout? No. Try to think. A bobble breakout is where it comes up, fails at a level, pulls back, and then comes back up through that resistance level the next time. That's just the reversal. End tap, nothing greatly exciting here. Left-right combo right here at the support level. You can be buying this one on positive trading, but you just watch to see what happens once it gets to the T line. A left-right combo is a Doji followed by a bullish engulfing signal, or a Doji followed by a bearish engulfing signal. And it's a very, very strong reversal signal. And anytime you see a Doji in a combination or a pattern, it's usually that much more credible. Okay. We'll wait to see how the markets open tomorrow. If they start opening positive, especially in the NASDAQ, that may tell us that this profit taking is over. We still have more upside. All right, everybody. We'll see everybody bright